Hello, everyone. Hey, Press, how are you?
Hello, Lisa. How you doing?
Pretty good. So, guys, you have Lisa J Stocks and Prez-The-Investor. Please make sure to check out both of our channels. Um, Today's topic, we didn't give too much information on, but now that we are here for our Sunday live, Prez, can you give them finally let them know what our secret topic of the day is?
Okay, today I would like to play a game, Scenario Sunday. So basically, the scenario is you enter the market at the top of the cycle. So what do you do once the market starts falling? Maybe you could have gotten into risky assets like Dogecoin, Shiba Inu, things of that nature, and you're looking at a red portfolio because you thought that they were investments when out in the whole actuality they were actually trades. So what do you do? That's what I want to go over today.
All right, sounds good. Sounds
So
good.
Lisa, what would you do?
If I was in a red portfolio, Prez, give me a second. I'm just trying to get my Instagram live going over here too. Uh so what would I do? What have I done? I guess that is the question because I've been there before
Right.
and hmm, I'm sorry. I'm struggling.
Hey Bronze, how you doing? Robert, Kelly, Kenny, how y'all doing?
Okay, I think
So
I'm gonna
what
have
would
to
I
come
do?
back to this. Yes,
Let's
please,
see. What
please.
would I do? This is what I would do. The first thing I would do, I would reassess. I would reassess. I would take a look at what I'm actually holding. I would take the time out and do research on each asset and find out is it worth holding on to for the long haul, or do I consider cutting my losses? Now, the last thing I want to do is give up. I don't want to give up. I don't want to exit the market completely because you can take that money, you can save what salvage what you have left and reallocate. You can just simply reallocate them funds into stronger assets, more proven, like your Apple, your Microsoft, your VOO, definitely VTI because that's my favorite. Not financial advice, but yeah, you definitely will have to reassess and reallocate. That's what I would do.
All right. Sorry, I'm over here struggling still with the setup. So I have definitely invested. I have some of my investments have overlap. Like I invest for Apple for myself. I also invest into Apple for my daughter, for example. But there were very different starting points on my investing on her behalf and where I started for myself. So with that, everyone like the things that I share on my channel that are my ETFs as well as my long-term hold stocks, if they're new to you, if there's something that you're just going to be adding to your portfolio, but I've been investing in into it since 2020 or 2021, for example, you have to realize that your starting point and my starting point are different. And your growth into that particular position is going to be drastically different than mine. And I've been able to see this in my own portfolios that I manage, for my family. So that's where I can bring to you what the experience has been, And I want to share, for example, I'm going to show you Amazon as one of the examples that I was talking about Prez in preparation for our chat today. So with Amazon, let me go ahead and share this. Amazon, I started investing into Amazon in late 2021. And these are 4 investments from uh 2022 that I made. And you see, I took a long break, which I'm not sure why, but I first invested in January. I didn't pick it back up until September. Must have been focusing on other things. But between when I was making those first few investments and when I came back to investing into Amazon, there was a stock split. And this is something else I would share, not necessarily on topic with our being in the red, but I Amazon is one of the stocks, along with Tesla and some others that I wanted to invest into, and I didn't let the stock price hold me back. So always remember that we can buy fractional shares. You don't have to buy a full share. $2,800. I'm sure I didn't have $2,800. I invested $20 on this particular day in January of 2022. But just looking at the price points of the stock price when I was investing, $2,800, then $2,700. Stock put split occurred sometime in between before I started investing again. So now we're at $99 a share. I invested $10. We're at $96 a share. I invested $15. But what I'm trying to show you here is I'm sure after those just first few investments, you see the stock price is going down, but I'm investing. So I was in the red. But at that time, and then, throughout the years to come, I decided that Amazon was going to be a long term investment for me. So with that, um, now today, my Amazon stock is up 44.69%, and I've achieved over time, I'm at 16.7 shares. So you have to sometimes go through the struggle and, the kind of pain of seeing yourself in the red, but you have to look at the long-term picture. It's not always going to be, just a straight shot up where your stock price is steadily going up. The market goes up and down, and it's a matter of knowing this is added into my portfolio. Is it a long-term hold for you? Is it something that you believe in, that you've done your recent research on and are going to be holding long term? With that, Amazon was definitely one of those investments for me. So I was going to kind of go through the ups and downs and perhaps even be more focused to invest when it was a little bit on the, taking a little dip. So that's what I've done. And like I said, it has not disappointed. It's been a solid performer. It's been in my top 5 in my Webull portfolio, like, steadily, but it took time. It didn't happen overnight, nor for me did having, 16 shares, maybe by the end of this year, I'll add a few more. So, it's all a long-term strategy for me in building up these positions, so
Me myself, I'm guilty of it too because I did the same thing with Meta when that year they reported the really bad earnings. Like I
mhm.
was dollar cost averaging into it before they fell off a cliff, and I saw them fell off a cliff. I didn't sell it, but I didn't add to it either, and I wish I would have because I would have had a way lower cost average for one. I would have had accumulated way more than what I have now for two. And it was just a missed opportunity. Like I can't cry on my shoulda, coulda, wouldas now. But what I can do is share my experiences with you guys so maybe you don't make the same mistake.
Yeah, I'm sure we both could go back and forth with so many different things that we could have done differently. But yeah, we can't go back. So, oh well, why didn't we all scoop up a bunch of Tesla when it was at $100
Right.
or Bitcoin at 16 or below 20 even? I'm sure we can go on and on with the list. But it is what it is. And as we know better, we do better. But we also don't have we don't know what the future holds. So we're just using our best judgment here, and we're working with the budget that we have, and that's it. That's all we could do is move forward.
Yeah,
So
because sometimes one of your investments may, like Meta did, fall off a cliff, and you don't have that extra to pick up extra. But
mhm,
what I do, I just stay consistent with what I can afford to invest. So, for example, if I'm doing $5 a day, I don't care if it fell off a cliff. I'm still going to do $5 a day because it might fall a little more. You never know. You don't want to buy. They say buy the dip, but don't buy the wrong dip.
yeah. And I stay consistent with my investments, definitely do that also. But with that, I try to always have money available so that if there is something, I share on my channel, like for example, my $10 daily into VTI, but
Hmm.
I have that I do that on public. But I also do have VTI in my growth portfolio, which I have on Webull.
Right,
I only do my $10. I keep it to my $10 minimum on public, but if there is a time period, sometimes I do it maybe like a 3-week period. If I have extra money, then I'll do additional investments. And, um, and on top of that, I always like to share that I do work full time, and I have my 401k. So the investments that I share here, I just want to make sure that no one's forgetting that I've been working for many years. I have, rollovers that I've had from previous companies that I've created IRAs at Fidelity with the money that I was investing into my 401ks at that time, as well as
hmm,
my current 401k, because really I plan on focusing on my investing for retirement and for early retirement. So, um, not to say I would be glad if you're not investing at all. I would be glad and proud to hear that you're starting even with 10 or $15, whatever it is that you have, $25 a week, whatever. But I definitely want to see that grow to an amount that can build a strong portfolio, something to sustain your lifestyle and help you in retirement. So that may be 15% of your pay or more, depending on your age and where you're at in life. So
right. And to those out there that are contributing to a 401k, if you decide you want to leave that job, just roll it over. Don't cash it out. Don't. I've made the mistake of cashing out 401ks after leaving a previous employer, and that's money that you're not going to get back. And you could have rolled it over and continue to invest it for your future. So now it's like me, you can't catch up, but you're trying to play catch up to once you start getting to that age of retirement. Like me personally, I'll be 46 years old this year. I don't want to work till I'm 72.
yeah, I never ran into that, and the first company that I worked for I wish I was still working there to tell the truth, but I got laid off, and then the next job after that, I was there for a very long time. The next job after that, I was there for 4 years, got laid off again. So now my current job, I've been there for about 4 years now, but because throughout my, my work life history, whatever you want to call it. I've worked at 3 companies in my life is basically what I'm saying. And with that, I think it kept it a little more simple for me. And like I said, it's only been 4 years since I got laid off. So I was definitely in a more experienced place when I got laid off both of the times to manage the transfer and keeping up with my retirement, what I wanted to do with it. I think nowadays a lot of people work many jobs throughout their 20s and 30s, and like you're saying, they might
Me,
work at a company and have a small amount that they may not roll over into an IRA. The whoever the brokerage company might be like, "Oh, you can just take it," you know? But
right.
you have to be mindful to keep your money invested. So
Hmm.
I didn't run into that in my personal life, but I definitely hear people saying that, that they took the money and then put it in the bank, or they spent the money, and it's just they're missing out on the opportunity. If money was supposed to be invested, please, like Prez was saying, be mindful to keep it invested, because, you're only trying to work to take care of your older self. You're only trying to improve your financial outlook. And thankfully, another thing I haven't run into is, for example, needing a roof for a new furnace or something, and having nowhere else to go but to resort to taking money from my 401k for whatever issue I'm running into. So with that, I've really been able to grow my retirement investments without interruption since I've started working.
And that's something that's very hard to do, because I can remember a situation where the broker actually encouraged me to withdraw my money. He didn't say anything about you can transfer it to another broker. He didn't say anything like that. He said, well, you're free to withdraw it. You're gonna have to pay taxes on it and all of that. And I listened to him because I'm not gonna lie, I was pressed for the money,
Mhm.
and I just took the money. In all actuality, I could have found another way to come up with that money, because I didn't use all of it at the same time. I just only needed some. You understand what I'm saying? So I
Yes.
could have easily found another way, so I could have kept that money invested. But these are the games that the 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 smart money play to try to transfer the money from who they call us the dumb money. And I don't like that term, but that's how they refer to us. They call us dumb money.
Mhm, mhm, mhm. Yeah, I even did a video about it a few months back, because it's just now, I I I wasn't talking about money even with my own family. I wasn't having these conversations. I was living my life, but I was keeping it personal. And it wasn't, until the year before last that I was getting closer to deciding to start this channel. I started December, this December before last. So it's been a little over a year now. So,
Mhm.
with starting this channel, people around me, friends and family, they're now hearing me say what I've always been doing in my private life.
Right.
And now when they see me, they wanna have the discussion and share with me things that we weren't talking about beforehand, is what I'm trying to spell out, or paint the picture of. And it also let me ask certain people questions that I
Mhm.
wasn't asking before. It's like,
Right.
it's not that I didn't feel that I was close enough to the person, but I just wasn't talking about it. I was managing it for myself and figuring doing the best that I can here under my roof, but I wasn't even asking my own mother about, how much life insurance do you have? Whatever planning situation, your 401k, your pension, or I wasn't talking those things because I just didn't grow up doing it,
Mhm.
and I just didn't know how to get into the subject. And the people that I have started to have the conversations with, every time I have the conversation, I'm pretty surprised, um, and I would say somewhat disappointed in, where they're at, when I was hoping that they were doing better.
Right.
So, and I
It's like
thought. Mhm.
you get that mouse in a room full of snakes kind of feeling, because you want to talk, you want to have these conversations with other people, and it's like they don't either know what you're talking about, or they have a negative way they're processing what you're saying to them. So they completely shut the conversation down, or they make a whole bunch of excuses, or as to why they can't do the research, as to why they can't get started, as to why they can't take control of their financial freedom. Like, this is your finance, your personal finance that we're talking about here. I mean, do you really want to rely on Social Security or things of that nature to take care of you when you get old, or other family members? I don't want to be that burden on my younger family members when I get old to take care of me. They gotta give me money towards my prescriptions or things of that nature because Social Security doesn't cover it all or Medicare doesn't cover it all. I want to have some type of dividends coming in, things of that nature, so that I won't even have to worry about it. You got to get started, y'all. That's basically what we're trying to preach here. I don't know how to get it out, but I'm real passionate about people that's not investing and getting started and staying consistent and doing the research and stop making excuses. Basically, it's like you're standing in your own way. There is no excuse.
Okay. Okay. So let's try to bring it back to our topic of the red portfolio.
Portfolio.
Because I feel like not that we're getting off track because all of this is important, but is there anything else specific to that you wanted to share?
You just gotta, like I said, reassess as to what you're actually invested into and do the research. Like if you're invested into hype plays, you're gonna have to cut them losses. And like this is not financial advice, and this is something that I had to do personally. I mean, it's tough to see you down 50, 60, 70%, and you done put all your hard-earned money into something, but you can actually make that back by cutting your losses and dollar cost averaging into just VTI for real. And you can over time gain those losses back and then some. You're gonna have to add more to it, but you're gonna have to stay consistent and stay stubborn. You got to be stubborn with your good investments. It's like I said in the live yesterday, it's a marriage. Your investments are like a marriage, and trading is like dating. Like you get in and you get out, and with a good investment, you stand the test of time through good and bad. You continue to be consistent, and you'll be rewarded in the long term.
Yeah, and I think both of us, we seem to have a similar structure to our investments, and meaning that, we invest into ETFs, blue chip stocks, then smaller percentages into, say, crypto or anything that we might think is, and then even smaller into things that we might think are more speculative.
Right.
And we do work to mitigate our risk in all of our investments. I think I feel okay with speaking on both of our behalfs with saying that, Prez. Is that okay?
That's okay.
Okay.
I
So,
spoke to a guy yesterday. We was talking on Facebook Messenger, and he told me he was waiting for SHIB to go to $1.
okay. That's not going to happen. Never, ever, ever. But,
I didn't even
okay,
know
I
how
think
to respond.
I
I
didn't
mean,
even
I eventually responded, but when I first read it, the first thing I thought about was like, man, you must be down. He said he's been buying it for the last 5 years. I said, oh my goodness. And you
oh,
think it's going to? He said he sold his Bitcoin and bought SHIB. He was in the Doge, but he got out of Doge and went all in on SHIB, and he's waiting for SHIB to go to $1.
all right.
Ladies and gentlemen, Shiba Inu will never go to $1. Why? Because it's so many existing coins in circulation that if it were to go to $1, it would be worth more than everything in the world as we know it.
Okay.
So SHIB is never going to $1. It may lose another zero, but it's not going to $1.
I didn't have this written down in my notes, but, that and it's not a lot. Shiv, if you guys are not familiar with Shiba Inu, let me quickly just show you. It's a little teeny fraction of a penny. Oh, I don't even know. How do I put in the ticker for it?
SHIB USD.
But, hmm, SH. My story on Shiba Inu, which I cannot pull up for some reason. I don't know why, but okay, anyways, I can't seem to pull it up. But back, in 2021, my SHIB, average is high. back in 2021. I decided it was one of those things I got into with no plan because I wasn't a big planner back in 2022. No, 2020. 2021. That's when Lisa was still in her learning phase and not the best planner. Right now, when I have my plan set before I get into something and it's in place within seconds. So I have changed. But back then, I bought 3 million Shiba Inu. Uh, and I think I was okay with the cost was only a little over $100 that first whatever week or so when I bought that 3 million. But with that,
I have it pulled up.
oh, you do?
Yeah,
Let me
the
see.
chart.
There you go. So can you tell them like how much it is? I just wanted them for people that were not familiar with what it is when you're talking about it. And I'm saying I have 3 million of them. I just want them to have an understanding of what the price is. That's all I was trying to
Okay.
show.
For one Shiba Inu, the price currently is 0.00003357, a fraction of a penny. So it's 4 zeros, 33560 now. It's not
So
even a
for me,
penny. And it's literally trillions in circulating existence right now.
when I bought that first, SHIB that I bought very quickly, that first 3 million that I bought very quickly, I was just that was definitely something I was just doing as I'm putting in what I'm willing to lose with the sheep. I just wanted to be a part of the movement with it. But right now it's actually I did add to it and it is actually up. But it took me holding it all of those years for it to be up. But it's a very small position in the grand scheme of things. So now back to what we're talking about here with the red portfolio. Yeah, my SHIB has been sitting red from 2021
Probably
until
3 years.
now. Until
Yeah.
now.
It's like, ask yourself, do you want to hold on to something like this for that long and watch it be red? Like that's a bellyache. For
Yeah.
me, it's a bellyache. I get up and I look at it. Should I sell it? Should I not? What should I do? Should I average down? What should I do? It's
But
like you don't want
before
to hold on to something like this that long.
But before I get into what I was going to say, with what you're saying there, I think the reason you wanted to do this topic today is because of the market. Maybe you need to talk about why you chose this because I think I have a full understanding, but I want everyone else to
Okay.
of the market that we're going to be in and what 2024 might look like and making your decision into certain things and where you might be painting the picture of getting through because it- depending on what you're investing into, yeah, it might be a little aggravating to look at it in the red, but we have to look at the long-term picture. And that's what I think you wanted to kind of help people to get their head around.
Right.
So, can you
Correct.
talk a little bit about that? Because I want to make sure we're bringing the encouragement that I know that you wanted this topic to be,
Okay.
Okay.
Where we are now in the current cycle, it looks like we're at the top. I could be wrong. I could be right. But it looks like we're at the top. So if you're just getting started, I wanted to prepare you now for what's about to come or what's surely going to come. What goes up must come down eventually. You're going to have institutions that are going to say, we're up 30%. Let's sell off. And the market's going to come crashing down. The economy could make a turn for the worse. We could be heading into a recession. We don't know. But at the end of the day, the market is forward looking. So we have to be forward looking in our investments. So that means I know you hear about all of the hype, Bitcoin's about making all-time highs, and you're probably not in the market yet. You're still on the sidelines contemplating as to what should I get invested into. Don't let Bitcoin be your first investment. Don't be like me. Don't be that guy buying Bitcoin when it's in the 60,000 range. On top of that, I want you to look more towards stronger, longer term investments. We preach VTI a lot, but there's other things other than Apple, Microsoft. You can look in your cabinet literally right now and go through your house and look at all of the companies or the products that you done bought. And I can almost guarantee you it's a publicly traded company, and you can start owning the things that you consume versus chasing the hype plays, because we like a fast dollar, and we think with the untrained mind going into this world that we're in that you can put $50 into something and turn it into 100 just like that. Although it is possible, but the way you're thinking is possible, it's not. You're going to end up losing that $50 versus making another $50 to go with that one.
Mm. And I think my bigger concern is that, you know, 5% or if people are even using a stop loss, it's a big difference between losing, let's say 10% of $50. Is that what you just said? $50, right? People are
Yeah.
what if you try to put in 1,000 or 2,000?
Right.
And I think that's where people need to really take the time to do small trades, do paper trades, build up your knowledge and, not jump into things and get yourself in a position where you've lost big. And I've
Now I hear a
seen.
lot of people say, paper trade. Now on Webull, I noticed that there is no stop loss on the paper trade on Webull.
Okay.
So maybe there's someone that know of a different platform where you can actually practice using a stop loss while you're paper trading. I haven't came across that yet, but if someone in the chat, or you can leave me a comment on where I can refer somebody to go to paper trade properly using a proper stop loss versus trying to do it manually on Webull.
And can you I've never done it. I'm referencing it, but I've never actually set up a paper trading account. Can you explain to people who don't know what that is, what it is?
Okay, paper trading is basically
And Prez, did you actually do it? Did you actually
yes.
okay.
Yes. So paper trading it's like a setting on your brokerage app where they allow you to go inside of it, and you set your starting amount is from $0 to $1,000,000, and play money is like just digits on the screen, and you can actually trade with it to practice trading instead of using your actual real hard earned money first. And it's supposed to help you learn how to actually trade and use a stop loss and things of that nature, how do you make good entries and good exits. But what I noticed on the platform that I mainly trade off of, which is Webull, they don't allow you to use a stop loss. So you only can buy and sell on Webull when it comes to paper trading. So I don't know if there's another app, like I don't use any other apps as far as paper trading is concerned, but I don't know if someone in the chat or someone that watches this live stream later on could leave a comment as to what other platform can you use that allows you to use a stop loss when paper trading, because it's very important that beginners know what a stop loss is and how to properly use it.
Okay, all right. So that was just some information because I feel like sometimes I need to make sure that everyone watching, if they're beginners or new to it, that I'm not saying words that they don't understand, and I'm trying to be better about that and making sure
Right.
everyone, can keep up with the conversation. If you guys know what I'm talking about already, please bear with us because I want. If there are beginners in the chat or, getting to know our channels that are just starting to think about investing or thinking about trading, I want them to know that there are ways to learn and to take things step by step and not get themselves in over their heads. So I'm not sure if the chat is something's happened with the chat because it seems like it cut off at 3:26, but
Yeah.
there's new chats coming in that I believe that we're not seeing. So if there's another device that you can use to see the chat, for some reason it doesn't seem like the chat's working anymore. And thank you everyone for coming in. I see Stock David is talking about focusing on picking strong portfolio and being consistent with investing, even if the market pullbacks. You'll be fine in the long run. And I think that's exactly the message that you wanted to bring here today. Um,
Exactly.
yeah. So yeah, just press. I just wanted to bring that to your attention because we're not seeing the chat. I don't know. This StreamYard likes to do some things to us every once in a while.
Right.
uh, but yeah, let's just keep going. So, you know, we were having a discussion yesterday. Our discussion yesterday is about fear in investing. And I think that's an element of people that your topic of today of, working through a red portfolio.
Exactly.
I often say that people think like, "Oh, is it too late to start investing?" And they'll say that as a blanket statement. And I want to make sure that people know it's never too late to start investing. There may be certain stocks, certain investment choices that you need to research for yourself. Maybe Prez or I would not encourage you to say, this is the time to get into it. It may be overvalued. It may be in a place currently uh, where we would not say that, yeah, it's the best time to invest into that. But investing as a whole, it's always the time to start. I want to see more people starting. If for yourself, if you need to prepare yourself for retirement, I'm always me first and foremost. I think you need to focus on yourself. I think there are some people that may not be able to contribute to their or in my opinion need to focus on themselves and maybe will not be able to focus on helping with college education, weddings, and all of this extra stuff. Because
Hmm.
what is that going to do for yourself in the long run if you're already behind with your retirement planning? But if you are in a sound place, or if you're gonna buy the $400 gaming system. If you're gonna give your children if all your kids are going to have a smartphone, iPhone, whatever, all these different things, I'm also about encouraging, even if it's a couple of times a year, Christmas, birthday, put some money aside too for into some investments, a UTMA account, a 529 plan, something that can give them a head start, or not even, or just something to gift to them at 18 years old when they're ready to perhaps go to college or get into a trade or something. So that's just my feeling on it. But it's always the time to get started with investing. It's just a matter of the right investment choices, in my opinion. What do you think, Press?
And to add to that, once you do start doing that, I would encourage you to start having these conversations with said nieces, nephews, and children, so that they'll already know what to do with that money once it's turned over to them, instead of just going shopping like I probably would have done if I was 16, 17, and one of my elders left me some money. Um, Basically, timing the market beats trying to time the market. It's never too late to start. It's really never too late. Um, it's never too late, and on top of that, you have to one do what you can afford to do. And I keep going back to it. Consistency. Consistency is key, and I'm always going to stress that you have to be consistent, and you have to be tough on top of that, because dealing with a red portfolio can be a little bit stressful. But if you got into sound investments from the get-go, it's nothing to worry about. I actually get happy when I look at some of my portfolios and it's going through a red period, because I can get these great companies at a discount. So it's nothing to be worried about, because unless you're betting on the end of human civilization as we know it, the stock market will always go up, but eventually it's going to come down for a short period of time.
Okay. So are you willing to share something that is currently red in your portfolio, but you are still investing into it. And I know because you recently started some new portfolios, it may be something that I might be significantly up on. Is there anything that you can share that is in that place for you?
I don't know how to. Let me see if I can do it here. But in the new portfolio, my Apple is red. Is I don't know what.
So how many weeks ago did you start investing into Apple?
Um, Let me see. Let me try to get to the page. It's not letting me pull it up. So I'm just going to look and read it off to you.
Probably about, is it going by
40
your
days.
40 days? Okay.
Apple itself in the new portfolio, it's been 40 days. And
Okay.
I'm currently down. I put so far, I've invested $10 into it, and I'm down $1.23
And what
from that $10
percentage is
that I
Apple going to be in your portfolio?
5%.
5%. Okay. So that's what I'm saying. Like, if Prez just started investing. I've been investing for many years for myself, probably close to 5 years for myself, maybe about say 2.5 years, or shorter time frame for my daughter. So we're all going to be in different places, but we're
Right.
thinking about the big long term picture. 10 years from now, we might all be in a similar place, but this is an investment choice that Prez believes in for the long term. So right now, you wouldn't think that anyone investing into Apple stock is in the red if you're
Right.
not thinking of the starting point. But it's something that doesn't concern you because it's something that you're going to build into for a long time. And I was mentioning that my daughter's Tesla at the beginning of the year, it was up 32%. This past Monday night, I was having a little meeting with her, it was down like about 1%. Her Tesla in her portfolio is red. But we have to deal with that. We have to realize and know what we invested into, know why we invested into, and be willing to accept, is this something that is going to be for the long term? And
Mm-hmm.
Tesla is something that we've done that on. Apple is something that we've done that on, and we're just willing to stay with it long term, as well as a few other blue chip stocks. But everybody has to make those choices for themselves. Along
And
with,
ladies, gentlemen, don't sell your long-term investments. Try to the weather the storm. I know times can get tough financially, and you looking at that portfolio like, yeah, I could use this right now. Don't do it. Don't do it. Just don't do it. That's that. I'm gonna leave that at that. Don't do it. Stay strong, stay consistent, and it's gonna pay off in the long run. I can almost guarantee you that.
so when do you have a time frame in mind of when you're going to tap into certain investments that you're making? Are you right now? Are you thinking therefore uh, and when you're in your 60s, or do you have time frames on different portfolios on when you're going to use the money, the dividends?
The time frame, as far as like I have my portfolio set up like a pyramid. So
No,
the time of
mhm.
you
I
say
mean the
as
time
far as
frame
when
of when you're going to tap into it and start using it, because we're
right,
giving it.
I'm getting to that
Okay.
part. The time period it would be a minimum of 5 to 10 years. But what I would actually sell would be the things towards the upper portion of the pyramid versus the foundation. Now, as far as the foundation, I'll probably never sell. I'll probably let my children and grandchildren inherit those.
Okay. So that VTI, your favorite VTI, may be gifted to how old's your son,
I don't
9 or
think
8?
I don't see me ever leaving VTI unless the business model changes or the expense ratio goes up. I'll probably be in VTI for forever.
Okay. All right. So what else can we talk about? Because for those of you who've come in more recently, the topic, our secret topic, our topic that we did not announce ahead of time is that How do you work through being in a red portfolio?
Yeah.
Basically maintaining your sanity and seeing the big picture on the choices that you've made and sticking with them long term.
Hmm.
So, how do we, we've been talking about how to prepare for uh going through the bull market and just being ready for the bear market. So do you have any recommendations or things you want to share around how much cash to keep on hand to take advantage of when the market does pull back? Like, what is your plan on that? Like, how much do you keep available to yourself for options and additional investing?
As far as options, if I were to add up all of my portfolios together, my options portfolio will be 10% of the total value of all my portfolios combined. That would be rule number one for me. Um, as far as extra cash, as we speak, I'm currently looking for extra streams of income to prepare for the next bear market so that I can have that extra cash, so that I won't be looking at my longer term investments like, you're looking kind of tasty. Maybe I can cash you out and sell you and pay off a few bills real quick. Um, I don't want to go down that road ever again. Um, what else would I recommend? Um, create more streams of income.
Yeah, yeah.
Something passive, something where you don't have to break your back to get those extra few pennies. You don't have to work a second job. It's it's a slew of things that you can get into to create streams of passive income. So as though you can have more money to buy that bigger dip versus looking at a red portfolio like, man, I wish I could just average down. I wish I could add more. Or maybe I should get out of this altogether and wait for it to hit a bottom, because nobody knows when the bottom is. I've only seen one content creator on YouTube that actually timed the bottom before, and he only did it once. I'm not going
Okay.
to say his name, but he reported that he got out and got in. If what he's saying is true and he's not lying, he timed the bottom perfectly. But nobody can really time the market. That's almost nearly impossible. You got to stay consistent. I'm gonna say that again. You got to stay consistent. And what I'm doing, I'm getting ready. I'm assessing my longer term investments, and I'm in it to win it. I'm here for the long haul. I suggest you to do the same.
All right. So let's talk about assessing risk with buying at the top of the market and trying to potentially, mitigate any potential losses. So I can't tell you how many times over the last few weeks where I've seen a headline of S&P 500s at the all-time high, Bitcoin, many different things at their all-time highs. So that's what's going to lead to you being in the red if you're starting at the top. Not to say that in future years, there's going to always be another all-time high. Not for everything, not for every investment choice. Let me be clear with that. But for many things, like the S&P 500, there will be another all-time high. Maybe not on some individual stocks. They might be on the decline if they're not keeping up with, the changes, the AI and the things the evolution that we are going through in some different sectors,
Right.
then that stock might be on its way out. But for some things, it's not. So how do we go about buying at the top and getting a handle of the stock price to know what you want to stay committed to and when you want to go harder into it? Or do you think how do you think we should have our mindset ready to go about investing in a potential bull market?
First thing, already have and set in your mind that eventually this green will turn red. Once you already have that set in your mind, then you can get to the point where, did I make a good choice with this investment? Okay, you made a good choice with this investment. you ride it out, stay consistent. If you set that you're going to do $5 a day into this investment, continue to do $5 a day. Now, as far as doubling down, that's up to you. That's really up to you. Some people do it, some people don't. But either way, you're and employing the power of compound interest, which is the eighth wonder of the world.
So I try to keep my I thankfully all of my investment apps, most of them were easy to tap into the higher interest rates, like on public, Webull, and on MooMoo. Right now I have all of them. Any money that I have sitting there, I'm at the 5.0 or 5.1%. So I just wanted to touch on that because, like you were saying, Prez, being prepared, that's how I stay prepared. I'm able to
Right.
keep the money on the actual investment app. It's better interest rate than even what I have if I had it over at in my saving account at Discover, which is 4.35%. Are you doing the same with having any cash that you have ready to use for investments or trading?
Not yet, but it's definitely in my immediate plans too. I was looking at the actual public investing app where they have they have treasuries that you can get into. They have a high yield cash account now that's available, and they also have alternative assets. I don't know if anybody know, but you can buy shares of music rights. I seen on there you can buy the music rights for the whole catalog. You can own parts of that and gain interest on holding that. Not something that I would personally get into, but it's something that you could possibly look into further on down the line once you get established in your investment journey. Like some people like to own shares of art and things of that nature. But
Yeah.
yeah, that's available there now.
Yeah, my investments are basically, stocks, index funds, ETFs,
Mm-hmm.
target date fund for an IRA. Not really into I have not dabbled into there is crypto. I do that. But not gold, silver, not much bonds. I think I want something a bit more aggressive than that.
Right.
Um, as well as
Bonds are boring.
I have, uh, I have real estate. I have a rental, property. So, and as well as, like I have my Realty Income and Main Street Capital, those type of dividend paying investments that
Mm-hmm.
I consider, also tied to real estate and stuff like that. But, you have to decide what mix of investments you want to have for yourself. Just giving a little recap on myself as you're sharing that about the about the music and stuff. I guess I'm pretty, uh, just, don't dabble too much into other things right now, but I'm fine with what I'm investing into. It may not be the most aggressive, but I'm not trying to be I'm trying to have growth, but in a way that I find works for me, you know?
Mm-hmm.
So
So does I want to ask you a quick question, a little bit off topic. Does the current performance of Realty Income concern you a little bit with the fact that a lot of these brick and mortar buildings, businesses are going out of business?
um when I first started into the passive income challenge, I would say that realty income was up at about $67. So I
Right.
that's something that I started kind of at the top and had to work my way to average down in that portfolio. But
Mm-hmm.
as far as concern, I mean, I have to keep an eye on it. It is the largest, share size position that I have. I have over 100
Mm-hmm.
shares there, um, not dollar-wise, but share size-wise, it is my
Right.
largest position. But with that, I think that part of what drew me into wanting to invest into it is the
The
type of
monthly dividend.
holdings. The monthly I love a monthly dividend, yes, I do. But I was gonna say, all 3 of the things that I started my portfolio are monthly payers, which made it very easy to track and convenient, and I do like that. But what I
Mm-hmm.
was gonna say was that Um, Even when we went through the struggles of, being in lockdown and everything, a lot of the holdings that are in Realty Income are the gyms, the BJ's, the Costco, the pharmacy. They businesses that weren't even impacted when we were at our worst, you know? I
Hmm.
still was able to I still those type of places were still open, even not the gym, but a lot of the places were still open even when we were in our worst struggle. And I
Okay.
do know a lot of stores are closing, but these are and then going to like a store, like a Dollar General or Dollar Tree, it's not a high-end store, it's a store that it's in the local neighborhoods that you have to go to. So, I say
Hmm.
all that to say that I hope that when you think about it that way, when you think about, going to the casino or just your basic, everyday items that you need, places that you're going to on a daily basis, the Planet Fitness or something like that, I hope that their holdings of the buildings that they own won't be impacted
Right.
even in the long term. Whereas, like, we're reading in the news, I think 120 Macy's are closing and things like that. I don't think of Macy's the way I think of a BJ's, you know? So,
Hmm.
there's
Okay.
things that are more but that's just a low level. This is just me talking. We're not looking at, the actual performance of the stock or anything. These are just some things that come to mind immediately when I think about Realty Income and holding it long term. So,
Okay.
what do you think about it?
Um,
Was what I saying, is that making
it
sense?
made a lot of sense to me. It gave me a little bit of insight, and I thank you for that. But I was looking at it more so like maybe I should scale back on as to how often I'm investing into it. Like I don't want to get out of it. I don't want to sell it. I do like the monthly dividend. They do have pretty solid holdings that they brick and mortar holdings that they have in their portfolio. So that's still a good thing for me. But the economy has been doing bad in the real estate sector and there's things of that nature. And I have been noticing a lot of brick and mortar businesses closing down. And it seems like they're trying to make us stay home and shop online.
Mhm.
So that's something whereas though I kind of downgraded it to the position size in my portfolio now.
Yeah. As
So
far
that's
as
one way I navigated through the bad performance of this company in my portfolio.
yeah. All right. So before we end, I just wanted to talk about the you talking about the position sizes and just living. This whole hour has been about living through the times when you're in the red. So, excuse me. Uh, Another thing that helps me with that struggle, two things I've shared multiple times that I've been in the red are my Disney and my Target. So, even though I'm still in the red on my Disney. I just, within the last week, I would say solid came up on Target about what? Maybe about 13%, where I was in the red for months and months and months. Still in the red on Disney, but because those are smaller positions in my portfolio, it made it easier because if you were to look at the total portfolio, the red positions were heavily outweighed by the ones that are strong. For example, my target, my average is $148. I thought that Target many months ago when I started investing into Target, I thought Target was a good deal and I was investing into it at 160
Hmm.
and different price points as it was coming down. But once it dropped, it was only 5% of my portfolio, and I didn't feel that it was enough for me to, like you're saying, that in the past you may have, cut some things out of your portfolio quickly at a
It
loss,
don't
right?
matter. Gotta
It
go,
don't
gotta
matter?
go.
Gotta go, okay.
I run a
So
tight ship over here. I don't know
I
if you remember
wasn't
when I had Johnson and Johnson in one of my portfolios, and I cut it when they said Kenvue.
they
I cut
split,
it.
yeah. But what I'm trying to share is that by also keeping those type of investments, the Disney, AMC, ChargePoint, Neo, things like that, smaller positions in my portfolio, if they do go red, I can wait it out and make my decision if I want to continue to hold them.
Exactly.
Whereas, thankfully, the Apple, VOO, VTI, Amazon, and Google usually for me are the top 5 right now that will be holding up my portfolio. So when I look at my overall percentage of everything together, which on Webull, I think there's about 19 line items. So those ones
Mhm.
that are at the bottom, the ChargePoint, the Disney, they are smaller positions and um things that I can deal with looking at in the red for the
Right.
long term while I'm being supported by the others. In time, if I just want to cut them at a loss, I'll do that. And I have done that. For example, with JetBlue, I didn't have much of that either. It wasn't a large position, but I held on to it too long. I wasn't looking at it as a trade. I thought that once we got back to, I bought it very early on, probably within a few weeks of when there was no flying or anything going on. I bought the JetBlue at like $7 and I held on to it thinking that, this is a long-term hold, that in the future JetBlue will be, a solid company. And I was just getting it low, but it went up to the high teens, even past 20, and then came back down below $10. And I decided it's something I don't want to hold on to. I'll just sell it all and put my money into one of my top 5 and just leave it
Mm.
alone and find other things to focus on. But there are many other things that I haven't resorted to doing that. But I've been through these different stages, and you have to know. It's not always going to start off where you're doing a strong performance from the beginning. So that's
I'm
what.
personally guilty of buying Carnival at $18 a share, and it went down to about $13 before I finally decided to tap out and said, you know what? But the reason why I got into Carnival, it was post COVID. The world was going to reopen. I said, hey, the cruise lines are going to be booming and the airlines are going to be booming. So I was looking at Carnival, and I think it was American Airlines as well, and I bought into both of those, and we went into a deeper bear market, and I eventually tapped out. I said, well, this isn't a good solid investment. This should be looked at more so like a psychological type of trade. I should have been getting in and getting out. The world reopened. Okay, the stock price go up. I should have been getting out then. But I was actually just entering then. I bought those companies at the top, ended up selling them at the bottom when I could have took that money and bought more VTI or more Apple or more, things of that nature, more solid investments versus uh, um, American Airlines and Carnival.
Yeah, yeah. I
Oh,
think with
and Plug Power.
Plug Power. Oh, I didn't
Yeah,
dabble. I didn't dabble in any Plug Power.
renewable
Uh,
energy. I was like, oh, I'm saying, Elon got these Teslas, everybody going to EV, then maybe that's the new thing. Maybe I'm seeing charging stations pop up. So I see Plug Power. So I start buying Plug Power. Not even doing my research. I'm like, oh yeah, this is renewable energy. This looks like a good idea. So, you know, we make
um,
mistakes and we learn from them. And then we share our mistakes with an audience so that you don't make the same mistakes.
Prez, sorry, I didn't want to interrupt you. I just looked down at my phone. I'm sorry that we didn't see it immediately, but Larry Jones stopped by and we missed it. I'm not sure if he's still here, but thanks for checking in, Larry. We appreciate
Uncle
that.
Larry.
Uncle Larry, he said he was just popping in. He's proud of everything that we're doing here. And I'll forget about the other comment that he put there. He doesn't realize that we are not monetized. But thank you, Larry, for stopping in. Uh, but he said, yeah, he was just popping in for a second. Can't stay, but he's proud of us, proud of the channel. Um, so I'm sorry, I got distracted when I saw that. I'm
And we
like,
both
I'm
have
I'm
small channels, but Larry Jones, for those that are in the audience, I suggest you go to his channel and subscribe, because that's someone that myself, I personally look up to for good insight on as to how to navigate these markets, because he has years and years of experience, and he shares his experiences with us. Like he like to say, he likes to feed the family. So if you're not following Larry Jones, stock up with Larry Jones, go to his channel and you better subscribe, because he got some good stuff going on over there.
All right. So I think we're ready to wrap up for today. Thank you guys for tuning in. We'll try to post our lives, towards the end of the week, so that you can be ready to know if we're going to be coming on. But we've been doing Sunday afternoons, so keep an eye out for us. I've dropped Prez's channel a few times, so take a look at that. He started a new channel just maybe the beginning of this year. So
Mm-hmm.
we are he is he is working towards getting to his first 100 subscribers on this very new channel. So check him out over there and leave a comment and let me know if there's anything that you would like us to cover, any, current events, topics, anything that you as a beginner investor or established investor would like to hear our take on, and just for us to bring as a live discussion topic. Anything you want to share in closing for today, Press?
In closing, my channel itself has a portfolio, so I do weekly updates over there. So if you want to follow along and the channel's portfolio journey, feel free to do so. And I will be making the best sound investment choices that I could possibly make, because I'm sharing it with you guys. And that's about it. I thank you guys for stopping by. And if you don't find a way to make money while you sleep, you will definitely work until you die.
Okay, guys, I'm going to be posting Miss V to my community channel, and she is a great resource for content creators. So go check that out, and I will see you soon. Thank you.